Well, hello and welcome back to Beyond the Cards, your favorite monthly podcast where your payments nerds here talk about the news stories and interesting things that you want to hear most. Welcome back, everybody. It's fall time.
It is fall. I'm so happy for fall. Fall is my favorite time of year, over the heat.
Hey there.
Hello, everyone.
Well, I've got my pumpkin spice. I finally found a good pumpkin
I
spice.
ran out of pumpkin spice creamer, but I found a really good one that I love.
I know, like you have to find the correct one for yourself. Otherwise, it's like it's either too sweet or like, I don't know. Finding the right one is the right balance. And that's a sure sign that it's fall in America. The pumpkin spice is flowing. The
Yeah,
spice
you
must
see all the
flow.
pumpkins, all the Halloween houses are getting put up. It's very, very fun.
Well, we have a
My
lot of
time
fun
of
and interesting stuff to talk about today. So should we start off with our first article, which I kind of feel like at this point, when are you a credit card issuer and when are you an airline? Like these airlines have just these ultra lucrative co-branded credit card programs. They're instrumental in making at least the flying experience in America slightly less terrible. I won't say it makes it good, but these airlines are coming out and reporting their earnings from their credit card programs versus their earnings from being an airline. And in some cases, the earnings are higher for their credit card programs than it is their airlines. And I'm like, at this point, are you just a credit card issuer that has some planes that people ride on, or are you an airline? Like, where do you draw the distinction? But at the core of this article is really, I think, exposes kind of the give and take nature of the industry, right? Like, the airlines are opposing anything that would reduce credit card fees in a meaningful way, because obviously that increased interchange fee is how they provide all of their lovely rewards, right? They have to be compensated. And so it makes it a very interesting position for them to be in because they're also an airline who probably the majority of the payments they process are via credit or debit cards. So they would also at the same time want lower fees. So it's weird. How can
You would,
you exist on both
you-
sides?
I don't know. You would think they would want lower fees, but I think they're getting their offset of those fees from us, the consumers, when let's say we buy more points or whatever. Um, so I think they're just afraid that if they take away these points or cut their fees and then they have no choice but to take away these points, that it's not going to be the travel is going to be less because a lot of people use their cars for travel points, right? Just so they can get a free flight here and there. Um, I don't know. I would me as as a merchant, I would want cutting my fees, but they're in the middle.
Yeah, but I don't know whether you remember, we've had such conversation many times before also regarding who is responsible for that. I mean, this is always the battle over who is responsible for funding the rewards. Is it merchants via fees or banks also via those new models. So maybe we see that there is something, a turning point where the economics shall change also, and we have to enter a new area where rewards are responsible for a lot of things, but they have to become less universal, and maybe through for example using new payment methods. For example, this is something that we see in Europe especially. For example, you have those airlines companies seeking more and more for new alternative payment methods that will be more useful and less expensive also than the traditional card. And even if we have in Europe, generally speaking, less reward cards than in the US, in the US, sorry. So maybe there is something to play here, where um, if the merchant cannot afford anymore to pay more, um, either banks or
Oh,
um, either banks are responsible, who are responsible, they are issuing those reward cards also. So maybe we have, so the merchants have to think about, and the providers also have to distinguish themselves by proposing and suggesting new alternative payment method or new uh, ways to at least turn it into an advantage.
Yeah,
I also
go ahead.
also think it's going to be hard to reduce the actual rates right now on rewards cards, but I think there's an opportunity to potentially set a max maybe. I mean, because one thing I know we've talked about before is how they just keep going up in terms of cost and acceptance. Um, but it seems like reducing them would be quite the quite the process, but instead thinking about some type of cap so they don't keep increasing.
Yeah,
I like how they say the credit card companies are the one that owns the plane. So it's basically like you're getting two for one. They're getting too much money.
yeah. Well, I mean, this is kind of like what I feel is the crux of the issue, right? These airlines report their earnings, and you look at their earnings, and in some cases, it's like 55, 60% of the earnings are coming from these co-branded credit cards. And we're talking billions of dollars, right? These airlines are all public companies. There is no incentive to their shareholders or to these CEOs to reduce these highly lucrative money making programs for them. But it does put them at odds with the rest of the merchant community, right? Because if you're a retailer selling widgets, you don't want to be paying 2.6, 2.7, 2.8% because you're not getting anything with that. But if you're an airline with a highly lucrative co-branded card giving people points every time they spend everywhere, well, you kind of want that because especially when you're trying to like differentiate yourself, make investments in more airport lounges, etc., like you have to finance that somehow. And, turning to these revenue streams is really beneficial for them. And I also think that like, and it goes back to something we've also talked about before, which is like in a day and age where literally just about anyone can get these high value credit cards, regardless of their credit score, their ability to pay, etc. Like it's also a problem of the fact that the ubiquity or an ability to get your hands on these cards is so democratized, right? Like 18-year-olds with Chase Sapphire cards trying to game the system to get lounge access, etc. Instead of it being, like a well-to-do older person being able to have that card. There's, I don't know, you guys, I'm terminally online. We all know it. And you see these like financial influencers telling younger kids, okay, like you need to build credit. You should get this type of credit card with this airline and just go all in on it. Yeah, there's a hefty annual fee, but if you spend your money right on it, you're going to be getting more out of it. And I don't know if it's a lot of the tail wagging the dog, etc., but it's just, I don't know. You're making too much money off of these programs. The airline industry kind of is not great. Like, no one loves flying on planes anymore. And it just seems like it's such a uh, cancel
It's
me.
just a
It's
high.
a
Yeah, but
it's a toxic
It's a
system.
it is a
yeah, but
very toxic system, especially when all the inconvenience happens. It's like, what do you do to recompensate me back for all of these issues that were caused by you? For example, last week.
Well, let's not get into the logistics of it, but like I think it's so toxic because once you get in, right, you're in. Like if you think about it, like there is no mechanism really to say like, say I was with Airline One, I've accumulated 250,000 points. I had their premier credit card, but for whatever reason, I want to change my alliance to Airline B. They're never going to let you transfer those points because why would they? So it's like once you're locked into that ecosystem, you were locked in and you are just however they change those points or rewards programs, you're just going to continue to keep participating. And I agree, Shira. I think that there's like lower cost payment methods where like the point value comes from the money you're not spending, but is the change to the bottom line more valuable than the change in the top line to CEOs and shareholders? I just don't think it is. And so you're just never going to get that change because it'll change the whole valuation of the airline. And no one wants to change that stock price. But at this point, I just think you got to be like, hey, actually, we're a credit card company with a few planes that you can ride on. That's where all of your money is coming from. How do you argue against that?
Yeah, I mean, weren't airlines at the creation of all this car ecosystem? With I mean, traveling. I guess it was really at the origin of everything. It was the main reason to create this payment card ecosystem to facilitate payments and to encourage this industry and people to travel. So yeah, I guess I think there is no way cars can exist without airlines and airlines without cars. I don't think it could work. So yeah, I guess those are airlines are car companies with some planes.
Just jet.
Good description. Yeah, some jets. And also, something that this article made me think about is that it seems that the U.S. for I don't know was some sort of regulation makes me think about the European European history, and I don't think it's the best idea. I mean, it's better to make sure that there is fair competition, making sure you can accept debit cards with the different debit networks, and making sure that there is basically this they break eventually this duopoly with Visa, Mastercard, eventually with the other smaller networks, including Amex. But I don't think regulating fees is the best way. And again, Europe is the example of failure regulating fees, because what happened is that
Hot take.
basically, it opened the market to non-regulated, sort of non-regulated wallets, which at the end are based on credit card behind. So it's just someone else making the same money. Uh, just, I mean, it doesn't work. You can limit fees.
Yeah.
I don't think it's the best way to go.
Well, I mean, what we talked about, like with that European example too, is like you're never going to get any new entrants to rival, right? Because if it's regulated to this scant margin, who wants to get into that business? Like you don't want to get into the business to be like, congratulations, we break even every single year, So the only real true way to have any intervention is you either have to lift the regulation or you have to have government controlled payment methods. And like, I don't know how people would feel about that, especially in today's geopolitical climate. But it's the only real way to make that change. And I think that's a good segue into our next article, which is talking about debit rewards, which is like even crazier that these are making a comeback. Because for those of us in the US, we have one true interchange regulation, which is the Durbin Amendment, which regulates debit cards from the largest issuers, aka those with 10 billion in assets or greater, down to 5 basis points and 22 cents, which basically all banks were like, oh my gosh, we're going to go bankrupt. Well, we'll never be able to handle this. And then they made record profits. Now there's the new debit rewards coming out. And I don't know about this. I feel like this is where we're getting into kind of a dangerous fintechy territory here that is based off of open banking-ish-esque frameworks that aren't fully legitimized. And so like you have these apps or these fintech companies promising debit rewards, savings rewards, higher interest rates, etc., to lure customers into signing up for their service and getting their debit card. But like, are they truly FDIC insured? Or is the partner bank that they use in the background FDIC insured, but is it really extending all the way to the customer? I'm just curious as to how debit cards can really be generating rewards other than an expansive branch of smaller banks to leverage those higher interchange rates.
Yeah, that's that's something that can be good, In the payment industry, we love competition.
Yeah, but I don't
You
know
see
if
what
it's
I mean?
truly
So
competition.
yeah, so if it threatens credit cards' dominance in these rewards landscape and so on, as a consumer, we might prefer it also. So, in a way, it can reduce everything regarding the revolving credit balances and so on. So, this can reshape, in a way, how banks also earn money. So maybe there will be a kind of shift also, because as of today, for example, the interchange is more expensive for credit rather than for debit cards. And so in the US, especially, maybe this will become something that can reshape. I think that it will be interesting to see how far the changes can go, so that we can at the end of the day attend something new also. You know that I love something to see something, evolving, and as we know, the payment industry is evolving, so this can be a differentiator also in the different ways on how the industry works in a way.
For sure. I mean, honestly, I think we're cooked. Because and we'll get into it at a later time because I think it deserves a extensive conversation, right? Like I agree in the fact that banks are evolving their revenue streams. And I think we see this with like JP Morgan coming out and saying all these fintech apps are going to have to pay to ping our API and we're going to start charging them. And we get to set our rates for this. You want to offer these services? Well, you don't get to ping our API for free anymore because you're making money off of our back and we have to support all of the infrastructure. So I think when you start looking at under the current interchange landscape, these kind of debit rewards, they have to rely on banks lower than 10 billion in assets. But that's, a line, right? Like it's if you're a penny above the line, right? Woo, everything's dropping to 5 basis points and 22 cents. So in order to then be able to supply these rewards to these kind of fintech providers, like how many network banks do they then have to establish connections to? How do they ensure that a partner bank that they're utilizing doesn't cross that threshold? And I would think like if you're a bank sitting in the background, right? Obviously, you want to grow your revenue from this maybe data services stream, but you have to be careful because one, these potential fintechs can just divert a flow of accounts, can divert flows of data pings to a completely new bank. And they almost have to kind of it's almost like a multi-level marketing scheme, right? Like you have to keep recruiting these smaller banks into the picture because as you grow, that means that you can't continue to concentrate all of those assets in one bank because you're going to throw off their collateralization ratios and you're going to set them over 10 billion in assets, which means that they're not going to be able to have higher interchange rates and therefore no more rewards for them. And then like what does that app do? Go, oh, I'm sorry, it's been a great time. We're taking our, 150,000 accounts and separating those into 5 new banks. So I don't know. Could be a feast or famine type situation. It'll be really interesting. And I also think it could potentially really tangle the open banking system. Open banking in quotes, right? Obviously, we don't truly have it, but can really tangle that because you're now going to have just like this massive network of banks to be able to support those types of quote unquote rewards. So, I mean, like, haven't we already kind of seen this? Like, there's
I
already
think
been.
so. I want to say this sounds very familiar. Like this has been up in the air for a while.
Oh, yeah. Like, and I don't know.
But the question is, can
Another
they afford all of that? That's the can they really afford giving away that just for debit? I mean, they're already giving away for credit
well,
cards,
I
right? These
honestly, I
rewards.
think so. Again, terminally online, I've been doing some digging into this. I think when you look at some of these same services that are offering these larger debit card rewards, a lot of them have an earned wage access component to them. And so it's like, hey, get your paycheck 2 days sooner, get your paycheck 5 days sooner. We'll loan you the money via earned wage access, but we're going to take interest on that.
Right.
So I think that they kind of lure you in, and perhaps maybe that's their strategy to say, well, we don't have to rely just on interchange revenue. We have these other revenue streams that we're actually adding to the debit card in terms of rewards, but that revenue stream is not directly related to the interchange revenue that we are generating from the issuing and utilization of those cards.
True. And I was about to say I feel like these rewards for debit cards has been around for a while, because I've seen some banks and issuers already have rewards for debit cards. It's just minimum, but I think they're wanting to expand as they see that the consumers are rather use their debit card and then their credit card. But some of us are forced with whoever you like whatever merchant you use, you're forced to use a credit card instead of a debit card. But I think the go-to is always to use your debit card. So I think that's one reason why they're expanding as they see debit thrive in the payment method.
Yeah, I mean, it traditionally has been one of the fastest growing payment methods. Well, should we talk about some scammers? I love a I
Let's
love
go.
a good scam.
Cameras, yes.
Yes.
I'm always so intrigued by credit card scammers. Like, I always am just so like, who sits around and thinks this stuff up? So we saw an interesting article come through from this like primarily like car and driver focused publication that came out with uh and you know my feelings of the TikTok. I can never tell if it's truly accurate or if it's all just like for clout. But this publication is featuring this TikTok video where the poster is saying that they went to go pay at the pump and there was a fake tap to pay sticker on the gas pump. And when they went to pay, and like this is where I think like the article is like maybe a little bit off. The tap to pay sticker wasn't truly a real tap to pay. It had a QR code on it. And so they went to pay via the QR code, and obviously the QR code was a redirect to the scammer. And so I just thought it was really interesting because like I started thinking of as like how would you scam tap to pay, right? Like you'd have to have an NFC. I just don't think it's possible.
I mean, who goes to a gas
Yes.
station and scans the QR code?
Right. Like, as soon as
I
I don't see that little metal plate on the thing, I'm instantly either pulling out my card or walking in the store.
Yeah, because you usually look for the little 3, like, Wi-Fi, whatever that tap
Yeah,
to
the
pay
little
logo
dots.
is.
Mm-hmm.
Yeah, and then double click the side of your phone and tap it. So, I mean, it seems like a red flag that Exxon would have a QR code out there to use your Venmo account.
Yeah. And that's where I'm
Yeah,
kind
and
of like, I feel like it's one, I always tell people I'm like, the safest way to pay at the pump is to tap, right? Because like that chip is inside of
Yeah.
the AMD, right? It's not like a credit card slot where you could jam a little something in there and like honest
Yeah, that
advice
little,
is
like, copy thing
Yeah,
that
the
they
little
made
copy
for a
thing.
while. Yeah.
yeah, and I've been credit card skimmed at least 5 times living in the city of Houston, so I now only use Tap to Pay because here's the thing, right? Like, I feel like this is where the TikTok video is not accurate. Even if you had, like, an NFC chip behind that sticker, right? How you would need a merchant account to be able to, like, access it, right? Or would it literally just be, like, a full redirect into someone's bank account? Like, I feel like NFC technology does not work that way.
I'm thinking it's like, those QR codes that they use for like Cash App or anything now. Now you could do QR codes for Zelle. So I wonder if it's something like that to where they just make a printout of their QR code, stick it on the sticker, stick it on a little plate, and then do it that way. But I guess we could have figured out that this was coming. I mean, scammers find a way around everything. How? I don't know. They're probably one of the smartest people in the world.
Well,
I have the feeling.
go ahead, Chira.
Not literally.
No, but I have the feeling that it's nothing about the technology, the QR code technology. At the end of the day, it's rather something like social engineering fraud or something like that. So it has nothing to do with contactless payment by themselves as they use tokenization. So there's a little bit of information missing on this TikTok.
Yeah, I
Why would you
know.
even go
That's
use it?
that's
Sorry to
the
be.
common point of
I don't know how
that's the
this will
common
come
point.
off, but why would you go to a gas station and scan a QR code as a payment?
Yeah, that's
Yeah.
it. I feel that it's rather the physical environment, but not the payment technology by itself. So that's the reason why I have to admit, Dan, as my boss, I want to have the ability. I want to have the ability to educate people on TikTok also about payments because they need to. Also, there
Oh my
are
gosh,
so
I
many
know.
false information. So please give me the authorization, please.
Well, look, we have a lovely production assistant now. Maybe we'll do an entire episode where we react to TikToks and we'll just become a reaction channel. How about that?
Love it. Love it.
It'll be the easiest content we ever produced. No, no, no more are we going to have intellectually stimulating conversations about the machinations of interchange bank issuers, merchants, etc. We're just going to react to TikToks.
I want to talk about everything at this point.
But yeah, I mean, I remember like reading this article and just being like, that's not how this works. This is impossible. Yeah, because I was like, this is impossible. Like you can't do it that way. And the steps even in the process would be like, ooh, that's weird. I've never had to like click a couple of extra things after I've tapped, like, and started to initiate a tap to pay. Like, the terminal just recognizes and starts to do the tokenization because, like, you can't even support tap to pay without basically integrating a few other pieces, especially like with Apple Pay and Google Pay. Like, you do need to have Apple Pay, Google Pay merchant IDs. And sometimes that's set up by your acquirer. Sometimes you have to do it independently. But like, you still gotta do that in order to take it. So it just like it. I wanted to throw that in there because I was like, this is so silly. Like, this is how misinformation spreads. And this is like, I thought about it and I was like, okay, so what is the end goal here? You go back to inserting your card into the terminal? Because that's really that's just going to make people want to invent sleeker, more efficient card skimmers.
Right. And it's more common for those at the pump readers instead of in the store.
And I already hate getting gassed, and so, like, ugh, I don't wanna, like, have extra stuff.
Yeah, but remember, I don't know whether it was your case in the US, but I remember that before COVID, contactless payment were not that frequent
Nowhere.
in France.
No, nowhere.
Even, voila, that's it. Even if it was something that was, the technology was very mature, everything worked very well at this time and so on, except maybe payment, contactless mobile payments. You see what I mean? So, except that, but it was a special, it was really particular to France because at this time, the carte bancaire terminals were not ready uh, for uh, for Apple Pay and so on. And um, by the way, anyway, this was something, but at the end of the day, this was not very common because a lot of people were afraid because they tend to think that their card information could be stolen also through uh, uh, through um, through NFC and so on technology, which was not really the case at the end. So, and when COVID came, they had no choice but using contactless payment. So, and right now it's very common, for people to use contactless payment. So maybe this kind of drink and everything regarding QR codes, even if you have this kind of TikTok trends, I'm not sure that it's really a trend that it's getting viral. You know what I mean? I'm not
Mhm.
sure of that. But even if you have this kind of thing, it, it remains a viral TikTok, which does not have a lot of influence in the time. So, and at the end of the day, I hope that one day that it will be technology that will be used, that will be more and more used because of its relevance. And we see that even if, for example, in Asia, this is something that is really common right now.
Yeah.
It's not something new. I think that we are more and more getting into using this kind of technology without the influence of this kind of TikToks. I'm sorry, but this TikTok is really
I
it's
mean, if
really
there's
funny.
anybody who's, like, equally terminally online as I am, it's you, and I always appreciate that, viewpoint. I I always kinda, like, take a step back and, like, I used to be one of the skeptics of being like, "Okay, like, how aggressively are people going to actually switch to tap to pay, especially from their phone?" Uh, and honestly, I, like, almost never pull my wallet out anymore. The only time I ever pull out my wallet to do tap to pay is if they maybe don't have a terminal with a great NFC reader, and I've, like, tapped my phone several times, or I'm, like, making our two pieces of technology have a intimate, relationship, or I'm sliding my phone all over that terminal being like, why is it not going? Like, and I'd be like, "Ugh, let me just take out my card and tap it because that'll work." But, like, I'm a convert. I think I probably 90% of the payments I do now that aren't, uh, through the web, I'm doing contactless. I'm
You-
almost, like, affronted by non-contactless. I'm like, "Ugh, what is this?"
Yeah, I'm gonna say even the ones that you can just simply pay online through Apple Pay, like I never pull out my card and it's like what? I don't even have it. And that's why I think it's, for instance, for the only time I pull out my card is if I go to Walmart. That's it. Or I use the Walmart to pay. But I mean, it's an extra step. You got to go through the app. But other than that,
You guys, speaking of Walmart, Jasmine, I messaged you guys when I went there and could not believe I couldn't tap. I was floored.
oh no, you cannot tap. You have to do the Walmart pay or or do your card. And that was another conversation like I seen on online on actually
Yeah.
Instagram. And it was me kind of giving I was like, well, that's because, they like to keep their money in house. They're basically their own payment system
Right.
facilitator. So it was like me trying to give insight to people online about how Walmart Pay works and why they do the things that they do.
Yeah,
So
I mean, I gotta think that
yeah, China,
like,
I'm the same way. I'm like, "Oh, no, this is why." And they're like, "Ugh."
Smart of them, honestly, you know? I mean,
It
like,
is
here you
smart.
go. You have to use our app or insert your card.
Exactly.
yeah, it's gotta be like you can always rely on these major retailers to just have such deep benches when it comes to data analytics.
Mhm.
And there has to be something behind the scenes that says, we know a particular conversion is higher when we don't allow people to use this feature. Because maybe it is something like you got that airline rewards card is number one in your Apple wallet or your Google wallet. And they know if you're going to tap to pay, you're going to have a payment method change that they don't want. And so even though they're like creating a small point of friction within the checkout flow, it's probably paying for itself. And they probably have the internal data to say, well, this is actually a good choice for us because it's saving us, tens of millions of dollars
Mhm.
versus just letting people tap to pay.
I was gonna say, and it's another way for the customers to get those customers to use that payment method as well. Like, you are only forced to do 2 things: use your card or download the app in order to pay that
Pay by
way.
their pay
Wanna
by
use
bank thing. Well, this is a great transition into kind of our last topic, talking about ecosystems and controlling your ecosystem. Hinge, a extremely large dating app, has announced that it plans to create a payment system outside of the App Store ecosystem. And really, this is resultant of the major court ruling between Epic Games versus Apple, which, like, of course, terminally online, so I like followed super intensely. Uh, which was basically a court ruling that said, like, we're sorry, App Store, you cannot force these apps to only use your payments ecosystem. They have to be allowed to divert payments outside of your ecosystem. So it's very interesting to me to start to see these movements. And ultimately, I'm interested, and not that I'm like on any dating apps, but if I were to need a dating app, right? Like, obviously, it's way better to use. Well, I shouldn't opine on this, but like, if you're going to utilize the paid version of it, right? Does that allow these apps to reduce their prices a little and attract more users because, you cut that 30% revenue share of the payment stream that could equate to some pretty solid savings that allow you to kind of grow your user base because you can drop the price.
Yeah, and I think that Epic Games is the first one before a lot, for instance. You see what I mean?
That was such a fight.
So,
Good for them. Like, that is really
but the
like,
good for them,
I wouldn't say it was
and
like a David
yeah,
and Goliath situation. It's probably more of like a Goliath versus a Goliath.
Goliath, yeah, both Goliaths, yeah, of course, because we are talking about Epic Games,
Yeah.
which is, you see,
It's
but
Fortnite,
I
right?
think that it's a
Fortnite is their big
mm,
one.
Yeah. But I think that it's no. Is it a good thing or a bad thing? We're not here to say whether it's a good thing or bad thing. But the thing is that they have to care also about the trust and convenience for the end user. I don't know whether, I don't know at all whether, because I'm not using this kind of apps also, but I don't know whether the user experience is the same. I don't have any information about whether the user experience, whether the conversions also are the same as they would be with Apple. You see what I mean? So, of course, there are some risks to do such a thing, but in a way, this open also the door to a lot of many other platforms
Mhm.
that can be Goliaths too, that are Goliaths too, and not only in dating apps or gaming in general, but also on other kind of apps. And if there are a lot that will follow, we'll see more and more different payment user experiences also. But these can be also a door open to innovation and also to competitions in everything that concerns application monetizations. So this can be a good thing in terms of that.
Oh, yeah. I
And mm,
No, I 100%. I think it creates, like, a lot of room for new entrants, right? Like, I could see there being a service that pops up that says, like, if you're a smaller app developer and you want to be outside ecosystem, we can help you put that payment solution together. And I think it will also, like, really kind of drive the app market because, you have to become profitable
Hmm.
at some point. And the thing is the only new stuff that's being developed are people with deep enough pockets to be able to kind of shoulder having to lose that much revenue. And I mean, realistically, everyone is, you know, starting to tighten their budgets. There are services out there can't like that help you cancel all of these like little recurring fees. So, it's kind of the name of the game. If you can kind of keep your costs below someone's radar, it really helps you in terms of longevity.
Yeah, I was about to say not all of these apps are forced to use through you know, go through the Apple infrastructure, but a lot of them do, especially when you download your app in the Apple Store. When you get ready to make a subscription or something, it definitely goes straight to the Apple infrastructure, the Apple payment way. So it is good to see that there's some people out here that are getting away with that because a lot of people don't even I forget half the time that my subscriptions are on Apple until I get it.
Yeah.
But I would rather have it go through some of these direct, through it directly than have it go through my Apple.
Yeah. I think the big thing is that there just should be choice, right? Like,
Right.
give people the choice.
Exactly. No
Oh,
trust.
but it's a good thing. It can give also a lot of retailers, for example, because as we have as many user experiences as we have apps, you see what I mean, and different app experiences, it can give ideas also for the retail industry and so on. So this can be something that we can learn from also. And this is epic games, as you mentioned. We have Goliath versus Goliath. We don't have David versus Goliath. So I think that we have to learn also from these type of companies. For instance, uh, even it has nothing to do with our topic by itself, but we remember that right now payment orchestrators are something that are new for the retailers,
mhm.
especially
Yeah,
in
yeah, yeah.
Europe and so on. but they've been here for 20 years. And the first kind of companies they were working with were gaming and gambling industries.
Yeah.
So we have to learn from that. And I think that this can be something very interesting and to follow also.
Couldn't agree more. Well, on that, I think obviously follow us because we are, as more things pop up related to this, as the story evolves, the ecosystem changes in meaningful ways, we're going to be the people who are paying attention and can actually relay the news in a non TikTok-y fashion. Uh, uh, and we thank you guys for watching. Honestly, like, subscribe, share, give us some love. And with that, we'll see
Yeah,
you
please.
next time.
Thank you very
See
much.
you next
Thank you.